Welcome to another episode of Cycles TV. Yeah, my name is Lars von Thienen, and today we are talking about a new episode on analyzing dynamic time cycles. Today I want to have a look at the daily US stock indices in comparison to the weekly cycles in those assets, because in both periods, so weekly and the daily, we are seeing some interesting lineups between the most dominant cycles, which I think is worth to mention and worth to have a talk about that. Before I jump into this session, let me show you the opportunity to meet us in June in our conference in New York. So if you have not heard about it, maybe take a chance to think about meeting the cycle experts in June live in New York. Yes, so let's talk about the weekly cycles first on the US stock indices, which has not changed, by the way, so this is not a surprise. We are looking at the S&P weekly here, and what we have talked a lot of times here on that show is that the 183 week cycle is the most dominant cycle, which we observed the whole back last year, so there's no really change in that cycle. What is important to mention, we mentioned the topping period of that cycle here back in November last year and early this year. So we are now in the early downward phase of that cycle, and that's important before we jump to the daily to always keep in mind. So the dominant long-term cycles seem to have changed from a 2024 upswing cycle into a 2025 and even 2026 downswing cycle. Long-term perspective. 183 weeks is especially important because this relates to the 41 months cycle, which has been related from Dewey and other experts a long time. So this is what we are tracking on a long-term perspective. That cycle has a very great correlation to past long-term swings in the markets. So we need to be careful having that dominant weekly status quo in mind. So with that said, let's now jump to the daily analysis. And the daily analysis is, especially in those weeks we see right now, quite interesting because it looks like we have a cycle pattern showing up on the daily perspective. So if we now jump to the daily charts, let's start with the NASDAQ index first. So this is the perspective of cycles looking at the NASDAQ from a daily perspective. So starting with the cycles spectrum, we have three important peaks here with a length of 79 days, 123 days, and 189 days. Those three cycles here selected as a composite cycle indicate that interim bottom now forming here since early April. So we are rushing into that expected down period. So there we had an alignment, and that could be an explanation of this very tough downward swing here due to the fact that the weekly cycle has aligned with the daily from that point in time. So, and take the White House out of the equation. If cycles from a weekly and a daily into this align into this status quo, you always see an acceleration in the direction of all aligned cycles. So that happened in December last year based on cycles, even before we knew who would be the new president. So, but now we're coming into the next stage of those dominant cycles, because from a daily perspective, we have now moved into the bottoming window. And be aware, these are pure dynamic time cycles. This has nothing to do with sentiment. This is pure time-based analysis. Yeah, nothing to do with price, oversold or overbought. Pure time-based analysis. So looking just at the first daily chart, let's continue and have a look at the other daily US indices here. So let's continue with the Dow Jones Industrial Index here. So same perspective. Here we identified mainly two dominant daily cycles, which is the 181-day cycle, as seen here, and the 226-day cycle, yeah, which, by the way, also aligned from a daily perspective from the topping pattern here, exactly at the first top, yeah, which was in alignment with the weekly top also. And again, this is not one cycle. This is a composite cycle you see here. So if we zoom out, you will see that this is a composite cycle out of the most two dominant cycles. They have been pre-selected on our algorithm, which we use here as a ranking algorithm, as an AI-guided technology. So even if you don't know how to select from those spectrum here, based on our standard procedure, those cycles would have been suggested. This is why I'm picking those two. You can also see here they have a great strength value, and especially the shape in that spectrum here from this one and this one here is perfectly lining up with what we want to see in a spectrum to have confirmation to use those cycles. So here we have the same timing window now, which we are currently approaching or have approached exactly today as a possible bottoming daily time frame from the dynamic time cycles on the Dow Jones Industrials. Let's move forward. Let's check the next daily US stock market. So coming to the S&P 500 daily. Yeah, that's the pattern we see using the daily S&P 500. So here combining the most important dominant cycles, which is on the shortest period, the 79 days cycle, as seen here in the spectrum. Then moving forward, we have the 123-day cycle. And then last but not least, again, the 183. By the way, this cycle is not selected in this case here. It was not chosen by our AI ranking mechanism. Instead, it was chosen here in that example, the 366-day cycle. So even though a slight different combination of dominant cycles, coming to the same conclusion we have seen from the other US stock indices, suggesting the same current alignment of a possible daily dynamic time cycles bottoming phase. Yeah, so rallying from a downward perspective into that period here, and now already have arrived at this possible expected downward time window. Yeah, so it's just purely time. No one can tell what about the absolute price movement sideways, upwards will come from this point in time. Yeah, so that's quite interesting because you don't always see between all US main stock indices those cycles line up, pointing to the same top and bottoming window here on the daily chart. And if we now go over through the different cycles, you will also see that those cycles are following a similar way. So just keep in mind the cycles here, 79, 1, 2, 3, 3, 3, 6. So that cycle, so the, not on this one here, so let's start with the NASDAQ first. So 79, 1, 2, 3, right? The NASDAQ, and now moving to the S&P, 1, 2, 3, 79. So those are the same cycles if we switch between S&P 500 and the NASDAQ. Here we just, on the NASDAQ, we have the 189 in addition, which we don't have on the S&P, but I think it would be fair if we would add them. Yeah, you see, even it would not have an impact on the expected downward period. So you can see it was not to showcase something here. It was not chosen due to the way they appear on the spectrum by our ranking mechanism, but even if we would add it, it would be not a different perspective in regards to outlook if we add it or not. So it's the same conclusion of those cycles here. Yeah, same for the Dow Jones. Again, we have the 180 days and 226. So here it was the, on the NASDAQ, it was, no, not the 226. But we have quite similar cycles across those. What I also want to add now in that case, or for this cases, if we have a look at the Semiconductor index, so another important US indice, yeah, we can look at. So this is the same perspective now, just looking at the semiconductors index. And here we can observe similar behavior, now having 4 cycles identified as most important. Now we see it here at the bottom. So we have this cycle with the length of 337 days cycle. We have the 187-day cycle, we have the 124, and again the 79-day cycle, which all 4 are here selected as dominant. And you see they also point into that perspective here. Yeah, you can see the perfect alignment of past bottoms and tops with that composite cycle here also following the shape of the dominant cycle structure here in that case. So, and here we even had the summer, the most dominant peak, but then we had 3 peaks here. Summer, I think this was then October, and then November. And you know that this, so let's say 1, 2, 3, and you know that this third individual top of the composite here was in alignment with the weekly topping cycle. Yeah, maybe you remember that at that point here we had the weekly cycle rolling over. So this then finally introduced this huge downswing, while the tops just before had just interim tops and bottoms until the point in time when the weekly and the daily cycles align to the same perspective. And said that that's important why I showed you the weekly cycle as the first analysis, because the weekly cycle is still pointing down. Yeah. So getting back now at the current situation, what is expected from a dominant cycle point of view should be a bounce or a sideways movement. But knowing this is against the longer term downward cycle. So therefore there's no clear conclusion if the longer weekly cycle will overrule the upward showing daily cycles. But coming from a daily perspective, there is a high chance now for a time-based bounce, just taking care that some downward movement might be resumed. For the resuming, we need to then check on the possible time-based indications on those cycles when they might peak, but it's too early to get back to that perspective here. So that's due maybe in May, June. Yeah, looking at that picture, then the next top from the daily perspective is maybe expected here in May, June, or even here it's July. On the S&P, again, it is June, July. So May, the period of May seems to look positive in regards to time-based cycles. That's the key message, talking about weekly versus daily cycles. Finally, stating this conclusion, we should also have a look at the technical indicators relating to those dominant cycles. So let's do this next. Let's switch back to the daily chart. Here we see the composite cycle first. And at the bottom, we see one of our most preferred cyclic adjusted technical indicator, which is the cyclic tuned RSI, based on the timing of the dominant cycles. And you can see that this is now generating here at the bottom face. This is not the situation where you would see the next rollover to the downside. So I would expect more resolution to the upside so that the technical oversold situation will resolve. So that's the technical situation on the NASDAQ. Let's use the semiconductors as next example for the technical condition. And here we have a similar condition. So coming from the lower band now into the channel to the upside, which is a possible indication that we are due for an upswing also from the technical perspective. Looking at the same for the Dow Jones, that's quite interesting in addition. I mean, it's not perfect, but you can also say that it's close to a divergence here between price and indicators. So it's quite the same price level low, but the indicator is making a lower low here, which could introduce this divergence now between the technical pattern and the price pattern. So here we also observe the technical condition supporting the possible upside potential. And last but not least, the S&P daily activating that indicator, for sure indicating similar situation here. So that's now also adding the technical perspective on top of the time-based cycles. And as said, it's quite a cluster to spot those conditions over almost all US stock charts, stock indices, based on time-based cycles. Again, not talking about oversold or overbought conditions, it's just pure time-based cycle analysis. And finally showing that, I mean, here in the foundation, we're also looking some kind of dashboards, which helps us identifying those situations. So you will see this is one of the reports we offer for higher level membership levels here, so what we call the tide reports. And you see the semiconductor index, the S&P 500, Dow Jones Industrial, S&P 500, NASDAQ 100, NASDAQ Composite, even showing those high rating scores here, which is quite interesting and important situation that this shows up as such a big cluster here, which does not often is the case. Or even another dashboard we are using very often here is to analyze different asset classes here in that chart, even intraday up to daily. And you see this huge green cluster which is forming here on the daily. So this means that on the daily we have a green cluster showing up on the equities, which is here the NASDAQ, the S&P 500, the Dow Jones. So said that, and that's why I wanted to show this here today in this episode, is that first, keep in mind, we are now in a long-term downswing cycle, which was confirmed by daily cycles turning down into late April. So those both factors, quite a good way to see why we had such a huge and speedy downswing. But the time-based cycles suggested that this downswing would go into end of April. We are now at end of April, and it looks like that the daily cycles are in a cluster across all US indices, which indicate a possible daily time-based positive perspective looking into May, early June. And then we need to reassess that, confirmed by the technical condition of those markets on the daily perspective. So that's the situation of weekly versus daily cycles in the US stock indices. As said, and for sure you need to take this serious, this is pure education, pure, very simplistic time-based cycle analysis, but that's what we're doing at the foundation. So we try to utilize methods for signal processing, analyze different data sets. We use financial data sets, which is quite a lot of data, and we get very quick feedback on if our analysis is right or wrong. But it's pure for education, that you get an idea about how to read a spectrum, how to read a cycle chart, how to build a composite, and just see it as a timing-based information. By all means, this has nothing to do maybe with what price will tell us afterwards. So this is no recommendation at all, and you are aware of the risk on your own. That's it for today. Quite crisp and clear. It looks like I'm not able to see the chat comments in the live section today, so I need to excuse. I cannot monitor or spot your comments today. So therefore, I would need to focus maybe on next Monday's session then to get back to your live questions and have some more time on your topics. Until then, thanks for staying with me today, and I would like to see you next time, same place, same time here. So have a safe week. See you. Bye.